From AAAFx, this is Chris taking a look at the upcoming week for January 29th. As we roll into February, we're going to start to look at, first of all, the potential on Wednesday being the last day of the month as a day that a lot of money managers pad their books. So, in other words, what they'll do is they will do everything they can to own all the proper stocks. Typically, there's like a rush to buy. You see crypto pumped a lot, a little manipulation at the end of every month. So Wednesday could be interesting. But let's go ahead and take a look at the economic calendar first. So Monday's dead. There's absolutely nothing going on. And as a result, I expect Monday to be a blah day, to say the least. Now, Tuesday, we do get consumer confidence and JOLTS job openings in the United States. JOLTS are jobs opening, just tells you how many jobs are out there that remain unfilled. Consumer confidence, of course, a huge deal in the United States because as Americans, that's what we do. We buy things. That's our entire economy. So expected to be at 113.9. Anything above that will really get things going crazy. And it could create a little bit of a reaction that you wouldn't expect. Typically, it would be a good thing if it's above there, but that might actually spook some stock market investors due to the fact that everybody's waiting on Wall Street to bail them out. If there is a lot of confidence, there could be more inflation, and therefore the Fed has to stay tighter for longer. Expect volatility. Wednesday kicks off with CPI numbers coming out of Australia that probably directly affects the Aussie dollar and the ASX 200 more than anything else. I don't know that it's going to have a major influence on the rest of the world. Shortly thereafter, we have manufacturing PMI numbers coming out of China, and the Chinese economy has been a little bit of a mess, and we have seen the government in China try to take measures to keep the market afloat. If PMI ends up disappointing, that could be yet another reason for a sell-off in China. China is a little bit of a basket case right now, and we are starting to see that influence some money managers out there. Later in the day, we get preliminary CPI out of Germany. Should be a non-event. After that, we get GDP coming out of Canada. That will obviously be a big event for Canada, the Canadian dollar, the Toronto Stock Exchange. We get ADP, non-farm employment change. Now, this is something that measures jobs gained or lost in the United States, but it does it through a private payroll company called ADP. It tends to be way off the mark anymore. Most people use it for directionality. So, for example, it's expected to come in at 143,000 jobs added last month, down from 164 from the previous one. If it comes in like at 112, then that will give people the idea that perhaps the jobs number on Friday, the official jobs number, will be a miss. If it comes in really hot at 220, it could give us an idea that the jobs number on Friday will be strong. It's a very wishy-washy number, mainly not because of ADP. ADP can actually do accounting. It's the U.S. government that can't. They do a lot of assumptions in the jobs number. There are seasonal construction jobs that are always added, whether they're added or not. That's why there's so many revisions down the road. So ADP can give us a direction of where the actual non-farm payroll number comes out on Friday, but beyond that, not a lot. Now, having said all of that, we have the Fed funds rate, the FOMC statement, in the FOMC press conference. Really what's going to come to move the market more than anything else is going to be these two things here: the FOMC statement, FOMC press conference. Now, everybody's waiting for Jerome Powell to start handing out loose monetary policy. The statement and his answers to questions are going to be parsed quite minusculely in the sense that they will look and hang on to every word. I expect a lot of noise around this. And depending on what happens here, if we get a big move in the market due to expectations, it could just nullify the rest of the U.S. announcements for the week. Thursday has a lot of PMI numbers coming out of Europe. Really not a lot to move the market until we get to the Bank of England interest rate decision. Now, the British pound has been somewhat stagnant. I think we've been waiting on this, so we'll have to see how that comes out. They are expected to keep it pat, but we'll see. Unemployment claims comes out a little later. That's your weekly jobless claims number in the United States. Depending on what the FOMC does, if it moves the market, that probably won't even be but a blip on the radar. ISM, manufacturing PMI, typically is important. I don't think it's as important this coming week because it is sandwiched between an FOMC statement, interest rate decision, and the non-farm payroll number. With all things being equal, whether or not the employment numbers in the United States matter will have a lot to do with what the Federal Reserve says. If they come out and say data dependent again, then it will matter. If they come out and say we're definitely cutting a couple of times this year, I don't know that this is even an event. It might be one of these deals where you see a lot of computers trading and throwing the market around for, an hour or so, and then we just settle into the weekend. That does happen from time to time. So be cognizant of that possibility. Okay, with that, let's take a look at some charts. This is the euro. We have gone back and forth during the week, and I think we continue to just struggle for any real clarity. I'm going to step back a little bit and look at this through the prism of multiple levels. So let me go ahead and put another level in that I think will end up being important sometime this year. When, I don't know, but I think it will be important. 105. And as I put these lines out, this is 105, 107 and a half, 1.10, 1.1250. You can see how orderly this market is. What happens next? I don't know, but we are dead in the middle of these two areas here of 107 and a half and 110. I think that is just a good representation of what's going on in the world right now. There's a lot of indecision. Gold has pulled back just a little bit during the week, but, I think the 2000 level down to the 1980 level should offer support. Underneath, the 50-week EMA is getting ready to go higher, and it could offer support as well. The $2,075 level above is a pretty significant resistance barrier. If we can break above there and close on the weekly candlestick above there, then I think we go much higher and more of a buy and hold situation. When you look at the silver market, there are a couple things that I would bring to your attention. The first thing is we formed a hammer during the week, but when you look at this area here, between 22 and 26, it has been very important multiple times over the course of several years. So let me go ahead and put the period separators on, and you can see this past year, we were basically hanging around there quite a bit in this year, although we did break down here. So to me, this is an area where I think looks very attractive to traders. The fact that we formed a hammer and bounced from the 200-week EMA, which of course is an indicator that a lot of people pay attention to, I do think that we go higher. 26 is the top of your range. Whether or not, we continue to go higher, I don't know. But ultimately, this is a market that I think we are closer to the bottom than the top of the range. So silver looks pretty good. Bitcoin has bounced from the 40,000 level to show signs of support near the 20-week EMA as well. I find this interesting because I think we're going to try to carve out some type of range. With that being the case, I'll have to wait and see, but I anticipate somewhere between 40-ish thousand and 47,500 will continue to be where we go. This next week could be positive. Not hold my breath for anything astonishing, though. Ethereum looks healthy. It has bounced from the crucial $2,100 level. I think at this point, it probably will go looking towards the $2,500 level again. Could take some time to get there, though. US dollar against the Japanese yen, we have seen a little bit of a pullback during the week, only to turn around and show signs of life near the 147 level. That being said, one thing that you need to pay close attention to is the fact that the Bank of Japan chose not to do anything to strengthen the yen, suggesting that they weren't really going to be able to do anything about tightening monetary policy. What I think could move this pair this week is going to be that FOMC situation and how that plays out. Ultimately, I think this is a market that will continue to see a lot of buy on the dip, but that particular day on Wednesday could, really move this thing. The Aussie dollar has gone back and forth during the course of the week. The 0.65 level continues to be important. Whether or not it holds will remain to be seen. But if we break down below the 0.65 level, the 0.6350 level is your support. If we can break above the 50-week EMA, the 0.67 level, and then the 0.69 level, could be your target with the 200-week EMA coming into the picture. Moving to the crude oil market, we've had a very good week. I think that a short-term pullback opens up the possibility of buying opportunity based on value. The $75 level could offer quite a bit of support, especially as the 50-week EMA or 200-week EMA, sits just below there. Breaking above the 50-week EMA opens up the possibility of a move to $85. Brent markets have also rallied rather significantly during the week, as it looks like we are testing the 50-week EMA and the $83 level. The $80.50 level has offered resistance, and I think there's a lot of support underneath. If we can continue to break above the 83 level, then we could go to 90. I do think oil is going to continue to see a lot of buying on the dip as central banks around the world look to continue to loosen monetary policy, or at least change direction. Traders are jumping in and picking up oil as a potential way to play it, as businesses should demand more energy. The S&P 500 looks bullish. Short-term pullbacks to 4,800 are buying opportunities as market memory comes into the picture. This is all about interest rates, and if they continue to crater, that should help the S&P 500. Keep in mind, the S&P 500 is driven by just a handful of stocks. It's not 500 stocks. It's something like 7 or 8. 4,700 underneath should be massive support, and therefore, I think every time we pull back, there will be plenty of value hunting. The dollar against the Canadian dollar has rallied to break above the 1.35 level, only to turn around and show signs of weakness. That being said, we're right around the 50-week EMA. Ended up forming a shooting star after another shooting star. And this does make a certain amount of sense due to the fact that the crude oil markets have shown signs of life. And that, of course, helps the Canadian dollar. At this point, if we break down below the last couple of candlesticks, then we could go down to the 200-week EMA. If we break above the highs of the past 2 weeks, that could open up a move to 1.3650, possibly even 1.39. The dollar against the Swiss franc continues to test the 0.86 level. At this point, I think we continue to consolidate. I just don't think there is an opportunity to get overly aggressive to the downside, because when you look at this, you can see exactly how negative we had been. If we can break above 87, we could very easily go to 92 and still not change the overall directionality. The last several times we've approached this area, we ended up at parity. I don't know if longer term traders are starting to think that, but it is certainly something worth keeping in the back of your mind. The DAX, one of my favorite indexes at the moment, sitting just below the crucial 17,000 euros level. A breakup above there opens up a move to the upside, perhaps reaching to the 18,000 level, maybe even the 19,000 level. Underneath, the 16,500 level offers a significant amount of support, and therefore I think you see a lot of chop back and forth after a huge move. And at this point in time, I think you've got a scenario where we are working off this froth, but this week certainly looks like we're starting to flex our muscles again. Looking at the FTSE 100, it's been a bullish week, but we're still in this same range between 7,800 above and 7,230 below. I think the big thing this week with the FTSE is going to be the Bank of England, so we'll have to see how that plays out. Dow Jones 30, we've broken above previous resistance. I think at this point, the 37,050 level is your floor. I think eventually we go to 39,000, and then after that, 40,000. This is a situation where we just continue to move based on the idea of loose monetary policy. And of course, the idea that we will continue to see, traders play that same game. The British pound initially rallied during the week, but continues to shy away from the 1.2750 level. At this point, I think this coming week will decide what happens next. If we break out above 138, then we'll go to 131.5. If we don't, we'll probably find the 1.25 level rather quickly. The Nikkei 225 initially shot higher, but has given back gains. Looks like we're getting a little exhausted. This is a theme that I've seen in a couple of other indices. I think a pullback is imminent. A pullback probably offers plenty of value underneath. I would love to get long of the Nikkei 225 somewhere near the 34,000 yen level. Will I get that opportunity? Probably not. But 35,000 would also be an area where I might start nibbling away. The NASDAQ 100 has been on an absolute tear lately. I think at this point, though, we're about to see a pullback. I would buy that pullback. I don't have any interest in shorting it. If we break the top of the candlestick, that's a very bullish sign. But quite frankly, this is a market that has gotten so extended that it's difficult to keep up this type of momentum. I mean, since the end of October, we are now up an astonishing, there it is, an astonishing 25%. So, yeah, I think that's a bit much. British pound, Swiss franc has given up at 1.10. Again, the Bank of England decision will make a huge influence on this currency pair. We'll have to see how it plays out, but I think at this point, you probably have a situation where the market will continue to be very noisy. I think it will be very loud. It'll be very difficult to kind of hang on to. But that being said, you could also make an argument that we are getting close to very extraordinarily low levels, as you can see. So we may be due for a bounce. I think the Swiss franc is about to make a move one way or the other, and it's not just against the British pound, but it's going to be against everything. The Swiss franc has been very strong. Sooner or later, the Swiss National Bank will lose its sense of humor. It's been known to do that more than once. US dollar against the Mexican peso. The reason I bring this up is the emerging market currencies aspect of it. We are forming a double bottom, but this past week we gave back gains again. So it'll be interesting to see how this plays out. Because if we drop down below, say, 16 or something, 16.30, the bottom falls out in the dollar. Then you'll start to see other currencies, the Mexican peso, the South African rand, currencies like that really start to take off. That'll be an interest rate differential play. Euro Swiss, this is another Swiss market that I think you're going to have to watch. I mean, look at this. Sooner or later, and the Swiss National Bank does not like to play around with these types of scenarios. They eventually will get aggressive. I'm going to go ahead and put a horizontal line somewhere around here. We'll just call it 94.5. And you can see that's what I'm watching. Somewhere above there, then we start to nibble away. Now, I would take this chart and compare it to other like the pound Swiss franc, the dollar Swiss franc, even like CAD Swiss, and just see how they're behaving. Because this could be a nice play. If the euro really starts to pick up strength, this will probably be the place to be, not necessarily shorting the euro dollar, or buying the euro dollar. So keep that in mind. You may actually have more traction against the franc before it's all said and done. So that's it for another week, and I hope you come back next week here at AAAFx. We do a weekly roundup Normally comes out over the weekend. You can get a good look at some of the things you need to pay attention to, my analysis of longer term charts to get you started for your trading week ahead.